In this video, we will analyze Chuck Akre's portfolio, all of his recent moves, and the history of all of his current investments. Chuck Akre may not be the most famous of super investors, but he's definitely one of the best. He has delivered 14.7% returns over 30 years, while most investors struggle to beat the market. So, what's his secret? Well, while other investors chase the latest trends, Chuck Akre has been quietly building wealth from his base in Virginia, focusing on businesses so boring they are brilliant. He created the iconic three-legged stool investment philosophy. And those three legs that great investments are based on are a high-quality business model with strong competitive moats, exceptional, honest management, and reinvesting opportunities offering high returns on invested capital. This stable framework has guided his successful strategy for decades. Rather than chasing trends, he seeks out what he calls compounding machines, businesses capable of growing shareholders' capital reliably over long periods. So let's start learning from one of the all-time greats and see what he knows that we don't. So let's go to Smart Money Portfolios and open Chuck Akre's portfolio. And we can see that the entire portfolio is worth $10.2 billion. He received $13.2 million in dividends last quarter, but the value of the entire portfolio went down by an incredible $189 million. We can see that he was mainly buying and that the portfolio consists of 19 investments. And last quarter, Chuck Akre closed one position, and it was DigitalBridge Group. We can see that he sold it for $1.4 million and that it was a rather long-term investment. This company is an investment firm focused on digital infrastructure assets, including data centers, cell towers, and fiber networks. He bought his first shares in Q3 2019, but it was a very, very small investment. When the price dropped from $24 to around $7 in Q1 2020, he invested some more money into it. And in 3 quarters, that is in Q3 2020, he really made this investment a meaningful one. Then we can see that through the years, the price was going up and down and he didn't make any changes. But then in Q2 2022, when the price fell down, he added some more. We can see that if the price is going down, he is adding more shares. So this shows a real value approach to investing. He understands a company, he knows what it's worth, and the stock price is there to help him, to create opportunities for him, not to tell him what to do. And then we can see that when the price was going up, he started to trim this position since Q3 or even Q2 2023. And right now, he closed this position. The price at the end of Q2 2025 was around $10. So it wasn't the best investment we can imagine. He probably made some money on this, but nothing really meaningful through the years, so it's understandable that he closed this position. Also, we can see that he received some decent dividends along the way, but also nothing exceptional. Okay, so now let's take a look at his current portfolio. And his smallest position in this portfolio is Verisk Analytics, a data analytics and technology company. So here we have it. It makes up 0.03% of his portfolio. It is valued at $2.6 million. He received a small dividend of $3,000 or almost $4,000, and the value of this investment went down by $327,000. And the reason for that is that he sold 14.8% of it. We can see that the price is actually going up very, very nicely. And he bought his first shares in Q2 2012 for around $49. And he was holding this position through the years. And then in Q2 2015, he started to really make this a meaningful position in his portfolio. And we can see that he is holding this for many, many years, and the price is basically flat. And at the same time, he's not receiving any dividends, as we can see here. But then, after 5, 6, 7 years, the price starts to climb up. And when it was at around $173, he sold almost all of his shares. So it was a really, really good investment, but it took such a long time to actually create value for Chuck Akre. But as we can see, he is a very, very patient investor. We can also see that there were quarters or like almost 4 years when he received some really nice dividends, but that ended when he sold almost all of his shares. And his second position in this portfolio is Berkshire Hathaway Class B shares. It makes up 0.07% of the portfolio, is valued at $6.7 million. Of course, no dividends from Berkshire, and the value of this investment went down by $1.2 million. As we can see, he sold 7.8% of it last quarter. And this is also a very old investment. We can see that he owned shares of Berkshire in Q4 2009. He bought them for around $65. And also here we can see that the price is steadily going up through the years, and he's mainly adding to this position. He made some sale transactions here in Q2 2017 for around $169, so he closed some gains. Then again in Q4 2019 for $226, and we can see that right now this is not a really meaningful position for him. And well, we can see that he sold just before the volatility of this stock started. But overall, selling it probably was a mistake because the stock is just going up and up all the time. Of course, we don't know what else he bought from the profits from this investment, so maybe it was a wise decision. Okay, next up we have CarMax, and it is a used car retailer. This company makes up 0.1% of his portfolio, is valued at $10.1 million. There were no dividends last quarter, and the value of this investment went down by $5.8 million. And the reason for that is, on one hand, the price going down, but mainly the fact that he sold 26.6% of his investment. He bought his first shares in Q4 2013 for around $47, and we can see he was adding to it through the years, and the price didn't really do much. The main trajectory was going up, but it wasn't a huge success. But we can see that when there was a dip, here in Q1 2020 and the price fell down to $53, he really added to it. So once again, we can see that he knows the value of the company and he doesn't confuse the value with the price. The price is creating opportunities to sell or buy something. It does not dictate his movements. And we can see that he started to sell and actually get rid of this position altogether. I mean, he still owns some shares, but it seems like he will probably close this position because for the last 3 years he is selling this, and of course with a decent profit, nothing exceptional, but a decent profit. He also didn't receive any dividends. Okay, next up in his portfolio is Sophia Genetics, a healthcare technology company. So this company makes up 0.11% of his portfolio, is valued at $11.5 million, no dividends, and the value change is $4.1 million. We can see that he added to this position 66.2%. And this is a fairly new investment for Chuck Akre. He bought his first shares in Q1 2024 for around $5, and now that the price is actually lower, it's closer to $3.10, he is adding to this position. He is making it more meaningful, and there were no dividends. So for him and for his time frame, owning a stock for 1.5 years is just the beginning of the story. So we can't really know what he will do with this, but it's quite obvious that he believes in this company because the price is going down and he is buying more shares. Next up, we have Fair Isaac Corporation, a data analytics company best known for creating the FICO credit scoring system. And this company makes up 0.16% of his portfolio, is valued at $16.7 million. And this is a brand new investment for Chuck Akre. He just bought his first shares for around $1,827. So that is a very interesting investment. We don't know what will happen next, but looking at other investments from Chuck Akre, it's very probable that he will add to it over the next few years. Okay, and next we have Goosehead Insurance, which is an insurance agency. This company makes up 0.38% of his portfolio, is valued at $38.6 million, no dividends, and the value of this investment went down by $4.5 million last quarter. He didn't make any changes to this position, so this loss was due to the price going down last quarter. And he bought his first shares in Q4 2018 for around $26. He added to this position through the years, all the way until Q2 2022. So this just shows his time frame of thinking. It really takes years for him to build up a position. Then he sold some shares when the price dropped to $45, so he was still up, he doubled his money, but it seems that for some reason he either needed cash or he got scared because the price was falling so rapidly. But then he held the rest of the shares, and right now we can see that he owns those shares when they are worth over $100. So that is a great investment. It went from $26 when he bought his first shares all the way to $100. And again, we can see the same pattern. The price drops like it did here in Q2 2024, and he is taking advantage of that and he's buying more shares. We can also see that sometimes he gets some dividends. The recent one was really nice, over $2.1 million. Next, we have Copart Incorporated, an online vehicle auction company. Here it is. It makes up 0.58% of the portfolio, valued at $58.8 million. And this is also a brand new position for Chuck Akre. He bought his first shares for $49 last quarter, and at the moment, no dividends. Next up, we have CCC Intelligent Solutions Holdings, a technology company that provides cloud-based software solutions. It makes up 1.36% of the portfolio, valued at $138.9 million, no dividends, and the value of this investment went up by $19.8 million last quarter. And the reason for that is the fact that he added 12% to it, and also the price went up a bit. This is another fairly new investment for Chuck Akre. He bought his first shares in Q1 2024 for around $11. And as we saw before, he is slowly adding to his positions. When he starts to buy them, he doesn't make one big acquisition. He basically tries to dollar cost average this buying trend through the years. So right now in Q2 2025, he's still buying, and the price is at $9, or it was at $9 at the end of that quarter. And there were no dividends here. Next, we have American Tower Corporation, a real estate investment trust that owns and operates wireless telecommunication infrastructure. It makes up 1.98% of his portfolio, is valued at $202 million. He received $1.5 million in dividends last quarter, and the value change of this investment is $361 negative. So the value of the investment went down because he sold 64.7% of it. So it seems that he believes that the best days of American Tower Corporation are over. He owned the shares of this company in Q4 2009. Then it was worth $43. And we can see that same pattern we know from other investments. He is adding to a position for many, many years. And then when the price was around $215 in Q4 2023, he started to sell. Last quarter and the quarter before, when the price is over $200, he is really trimming this position a lot. And it seems like he may exit this position in the next few quarters. Also, throughout the years since Q4 2011, he was receiving very nice dividends. We can see that there was a quarter, Q4 2023, when he received over $11.5 million in dividends. So a very, very good investment for Chuck Akre. Okay, next we have Danaher Corporation, a global science and technology company. It makes up 3.43% of his portfolio. It is valued currently at $350 million. He received over $500,000 in dividends, and the value of this investment last quarter went down by $13 million. And he didn't make any changes to this position, so the value change was caused by the price going down. And we can see that he bought his first shares in Q4 2013 for around $77, but only 2 quarters later, when the price was around $78, he really invested a lot of money into Danaher Corporation. And we can see that over the years, the price didn't go up that much. I mean, it went up, but nothing spectacular. And then it started to climb. It was at its peak in Q4 2021. But still, he didn't sell. So he believes this company has a long runway and can still grow. We can see it also by the fact that in Q4 2022, he added some shares for $265. So right now the price is down. At the end of Q2 2025, the price was below $200. But at the same time, he's receiving some really nice dividends, around $500,000 every quarter. So it is absolutely a great investment. Since Q2 2014, the price just went up in a beautiful way, and he's just holding and adding to this position all the time. So a very nice long-term investment. Then we have Airbnb, and it makes up 4.5% of his portfolio, valued at $459 million. No dividends from Airbnb, and the value of this investment went up by $111 million. And the reason for that is that he added 19% to this investment last quarter. This is a fairly new investment. First shares were bought in Q2 2024, and as with other investments, he is just adding through the years. Right now, the price at the end of Q2 2025, the price was at around $132, so a bit lower than his initial buying price, and he is still adding. And of course, no dividends here. His eighth biggest position in this portfolio is CoStar Group, a provider of commercial real estate information, analytics, and online marketplaces. It makes up 7.33% of the portfolio, valued at $748 million, no dividends, and the value of this investment went up by $10.5 million last quarter. He didn't make any meaningful changes to this position, and we can see that this position was opened in Q4 2019 for around $59. Then the amount of shares went up, as did the price, to around $71. And we can see that he was holding it in Q1 2022 when the price was around $66. He sold some shares, so he actually lost some money on this transaction, but probably he needed cash for some other investment. And then he was just holding stock. Now the recent buy transaction was in Q2 2024 for around $74. So as we can see, this is a meaningful investment for him, over 7% of the portfolio. But the price at the moment is basically staying flat. But we saw that with some other of his long-term investments. He can wait 5, 6, 7, 8 years until the price really goes up, until the market realizes that there is more value in such a company. Also, in the case of this investment, there were no dividends. Then we have Roper Technologies, a diversified technology company. It makes up 7.99% of his portfolio, valued at $815 million. He received $1.1 million in dividends last quarter, and the value change for this position was minus $38 million. And it was caused by the price going down, but also by a small correction in the amount of shares. We can see that he sold 0.7% of this investment. So he bought his first shares in Q1 2014 for around $200, and he was adding to it until Q2 2016. We can see that the price is going up nicely through the years, all the time going up with some fluctuations, and it may seem like a small fluctuation, for example here in Q3 2022, but actually we can see that it went down for 2 quarters and it took another 3 quarters to actually get back to the same level it was before. So he was down on his investment for 1.5 years, but in the long-term scale of things for Chuck Akre, it just looks like nothing. And also, during this entire period, he was receiving really nice dividends. Right now, they are over $1 million every quarter. Then we have O'Reilly Automotive, a specialty retailer of automotive aftermarket parts, tools, and equipment. So it makes up 8.31% of the portfolio. It is valued at $848 million, no dividends, and the value of this investment went down by $389 million last quarter. And the reason for that was the fact that he sold 27.4% of it. Now, this is another very long-term investment. He owned shares of this company in Q4 2009 when the price was around $2.50. Now he's selling this and the price at the end of Q2 25 was around $90. So absolutely an incredible investment. And also here we can see that he stays true to his investment philosophy. Here we have Q2 2017 and Q3 2017 when the price dropped a bit. We can see it was $14 when he added a lot of money to this investment. So absolutely great job. No dividends, but the price is just absolutely crushing it. While this video is not sponsored by any company, I am able to make such videos thanks to the support of Patreons of this channel. People that get access to not only the Smart Money Portfolios tool, but also Stock Ranking Pro, which has all the data about all the companies ever analyzed on this channel, and 4 different valuation calculators. And if you would like to join this great community of intelligent, driven, and like-minded people, then head over to our Patreon page. The link is in the description. Okay, and now we get to the top 5 companies in his portfolio. So here we have Visa, and it makes up 11.04% of the portfolio, valued at $1.1 billion. He received a dividend of $1.8 million, and the value change last quarter was $14.5 million, and that was caused by the price going up because he didn't make any changes to this position. Okay, so we can see that he bought his first shares in Q1 2012 for around $29. It is just incredible. We can see that he was adding to this position all the way till Q1 2017 when the price was around $88. Then again, the last time he added to this position was in Q1 2020 when the price was at $161. And right now, at the end of Q2 2025, the price is close to $355. So another magnificent investment from Chuck Akre. And it's so great not because he discovered Visa as a great investment. It's the fact that he's still holding it. He bought it in 2012, and it is still a huge investment for him. over 11% of his portfolio. Also, during the entire time, he got really, really nice dividends. So it's not that he finds companies that we don't necessarily see, though some of them are here, but the fact that he believes in them in such a long time, even when the price goes down in few different cases here, he still holds this company or even adds more shares to it. So that is absolutely his superpower, this long time frame. Okay, and the fourth biggest investment in his portfolio is Moody's Corporation, a financial service company that provides credit ratings. And it makes up 11.33% of his portfolio, valued at $1.1 billion. He received $2.1 million in dividends last quarter, and the value of this investment went up by $22 million, even though he sold 5.3% of this investment. So we can see that he bought his first shares in Q1 2012 for $42. At the end of Q2 2025, the price is over $500. So another 10-bagger or over 10-bagger for Chuck Akre. And the same scenario. Slowly buying and adding more shares through the years, then holding it while the price goes up, and at a certain point slowly selling the shares. So he is holding the company for about a decade, and then through the years, not through 2 or 3 quarters, through many years, he is slowly selling the shares and getting his money back. At the same time, very, very nice dividends coming in all the time. Okay, now let's take a look at the next company in his portfolio, and that is KKR Corporation, a global investment firm that manages private equity, credit, and real estate funds. So that is the third biggest investment for Chuck Akre. It makes up 11.5% of his portfolio, is valued at $1.1 billion, and he received $1.6 million in dividends last quarter. We can see the value change here is very impressive, $154 million. He is just holding his shares. He didn't make any changes to this position last quarter, but we can see that the price went up substantially. He bought his first shares in Q1 2018 for around $20, and adding all the way through until basically Q3 2023, when the price was around $60. And then he started to sell. At the end of Q2 2025, the price was over $133. So another really nice investment, especially if we look at the dividends. We can see that every quarter he received nice dividends. At some points, those dividends were getting close to $2.8 million every quarter. And his second biggest investment is Brookfield Corporation, an alternative asset management company. So it makes up 11.64% of the portfolio, is valued at $1.188 billion. He received $1.7 million in dividends last quarter, and the value of this investment went up by $187 million. And there are two reasons for that. One is that he added to this position 0.7%, and the other reason is that the price went up significantly. So he bought his first shares in Q3 2019 for around $35. We can see that the price fluctuates quite a lot. At some point, it was around $60, then a year later, it was back at around $30. But he is just adding and holding to this investment. So at the end of Q2 2025, the price was over $61. And he's still adding. So even though he started this investment 6 years ago, he is still in his buying phase. He still believes there is more value to it. He will probably soon stop buying, just keep it for many, many years. If the price goes up, he will start to slowly sell this investment. Also here, we can see really nice dividends, around $1.8 million every quarter. And his biggest position in his US stock portfolio is Mastercard. It makes up 18.14% of the portfolio, and its value is $1.851 billion. He received $2.5 million in dividends last quarter, and the value of this investment went up by $25.9 million, even though he sold 1.1% of it. So we can see here that around 2 years ago, he started to sell his shares of Mastercard. This investment started in Q1 2010 when the price was around $25. And we can see the same old scenario, adding through the years. For the first decade, he's still adding to this investment. Even when the price in Q1 2020 was $241, he was still adding. And he started to sell when the price hit $426 in Q4 2023. Last quarter, the price was $561, and he continues to trim this position. So absolutely fantastic investment. Another great investment for Chuck Akre. At the same time, very nice dividends coming in at certain moments, close to $3.4 million every quarter. So that is his portfolio. We can see that there is not one stock that is basically overpowering the entire portfolio, that is really, really nicely structured. And Chuck Akre's portfolio perfectly demonstrates that three-legged stool philosophy in action. All of his major holdings have strong competitive moats, whether it's Visa, Moody's, or American Tower. The management teams of those companies aren't just competent, they are capital allocation masters. And most importantly, these businesses keep finding new ways to compound returns. They are not just maintaining their moats, they are widening them. But what's really striking is how patient he is. Akre holds his compounding machines for years, sometimes decades. And the lesson here isn't to copy Chuck Akre's exact picks, though many of them are excellent businesses. The real lesson is his process. Before you buy any stock, ask yourself, does this business have a strong moat? Can I trust management to allocate capital wisely? And can this company reinvest profits at high returns for years to come? If the answer isn't yes to all three, Chuck Akre would probably pass, and given his track record of 14.7% annual returns over 3 decades, maybe we should too. Thanks for watching, and see you in the next one.